Hello accounts people, time to have a look at some VAT calculations, hopefully solving a few queries that are constantly running through the accounting system, and queries that we get in lessons and queries that are often asked of HMRC. VAT is a moving item. Not only is it updated by the Finance Act every year, it's also constantly changed by legal action in the courts, and HMRC will change the odd little rule now and again throughout the year. It's essential to keep familiar with the changes if you deal in VAT or if you complete VAT returns. There is quite a lot of items on HMRC's website. It is one of them. I've just copied this because two of the most awkward ones to fill in, or the ones that are most contentious, are box 6 and especially box 7. Exactly what goes in. I'll leave this up again for a few seconds at the end. It just reminds you exactly what goes in the boxes. There's a few arguments on box 7 in particular. That, of course, is quite easy to find on HMRC's website, and there are lots of blogs and answer and question sessions on exactly what goes in the various boxes, if you care to look for them on the internet. First of all, let's get on with our sales then. These are our sales figures: zero rated, standard rated. The £2,000 relates to the standard rating of items, and our purchases, again a mixture of zero rated and standard rated, the VAT on that, and there's an EU acquisition. We bought something, we'll assume it's a standard rated item because we made a little note there that VAT was £500. We've also got a bad debt. We're going to claim that VAT back, assuming we meet the rules. And the fuel scale charge is an output tax. This is where a business vehicle has been used for private mileage. Therefore, we shouldn't really have claimed the VAT on the fuel back, and that £50 has got to be paid over to HMRC. They're always quoted gross. When you do the calculations on the fuel scale charge, the £300 is the figure that would come up. Two little errors on the previous VAT return, or assume it's two. Either way, it's errors on sales VAT, total of 480 gross, £80 VAT needs correcting, and on our purchases VAT we underclaimed £120 worth of VAT. Our invoices, one or more invoices totaling £720. We'll look at those when we get to it. The general rule is we just do the net difference of 40. Box 1 then. So box 1 is just our sales and other outputs. In this case, the only VAT on our sales is the £2,000 on our standard rated sales, but we've also got the output of the fuel scale charge. So this one, despite the fact that it's a purchase, it does go in the output box. This is because the European Union is a free trading association. The idea is that when you bring something into the country, you declare that you should have paid VAT on it, and then you're going to claim it back anyway, so it doesn't actually matter. So this is the £500 that belongs on the EU acquisition. Total 2,550. So this is the one that generally causes most problems. You can see even on this little example there's more items. We've got the £800 on our main purchases of £4,000. We have also got in this box £500 on the EU acquisition. We've got £100 we're going to claim back on the bad debt relief, and the 40, which is the correction of these two errors. So we're claiming that back. That lot adds up to 1440. On a real VAT return, box 5 is electronically calculated for you to minimise the errors. It comes to 1110. So box 1 to 5, notice they're all to decimal places, pounds and pence. That's quite normal. Everything below that is actually to the nearest pound. In fact, everything below this is a statistical exercise only. If there's a minor error on it, the VAT people aren't really bothered. They're even confused occasionally themselves as to exactly what goes in the boxes. It's just a huge statistical issue. Box 6 then is generally all our outputs. In this case, we're telling them about the £1,000 zero rated, so just because it's zero rated it's still included. The £10,000 what you would expect, because that's our standard rated items, and the net of the fuel scale charge. So that one definitely goes in, that's on HMRC's website. That is one of the contentious items, but it's very clear on HMRC's website. Box 7, far more contentiously. A lot of people say you don't need to put the imports in it. Well, HMRC's website says otherwise. It's not a disaster if you don't. If you consistently don't, it evens itself out. It's no big deal. There are also arguments as to whether you put anything exempt, or exempt items possibly go in, depending on your situation. Check with HMRC. Anything outside the scope of VAT, like wages, of course, that doesn't. So in this case, we've got the £4,000 of our standard rate purchases. We've got the £500 of our standard rate purchases. And we've got the £2,500 from our acquisition. That adds up to £7,000. So when it says other inputs, here's a little bit of an anomaly. It doesn't include the bad debt relief. The logic of that is that the bad debt relief is possibly a previous financial year. It's got to be 6 months old plus whatever the date of the invoice was, or the time on the invoice. So it's going to be at least 6 months and 7 days old as an absolute minimum. It's such a long time ago, its figure in here is irrelevant. So just to complete then, box 8, we haven't sold anything to Europe. Box 8 and 9 are purely so the government can do the inter-Europe sort of transactions and work out who's exporting to whom, and share the VAT basically between the countries. And then last to finish off, we've got the £2,500 of what we bought from the European Union, and that is now complete, ready to upload onto HMRC's website. Just a quick reminder then, these are the problem areas. Take a long time to go through it, very easy to find. There's also guidance on filling in all the other boxes on HMRC's website.